Hey, what's up, guys? John here. Are we walking into 10% mortgage rates? Well, it seems that way. JP Morgan Chase CEO Jamie Dimon just came out saying that we're walking into likely a 7% Fed's fund rate, which means rates are going to continue to skyrocket. So all those people that thought that we were going to see a Fed pivot in January, many people, some of my best friends said, John, you're crazy. They're going to start to pivot. No way they're going to keep increasing rates. Well, look where we are now. It looks like they are going to keep increasing rates. Jamie Dimon came out 1 hour ago, said he warns the world isn't ready for 7% interest rates. This is the Fed funds rate, not 7% mortgage rates. We're already past 7% mortgage rates. But this is going to overhaul the entire economy. This is going to change borrowing. This is going to change home prices. This is going to change America. And I'm going to break it down for you clearly with verifiable facts. Some unbelievable stuff happening done behind the scenes with, you're looking at Elizabeth Warren, Bernie Sanders, all the people that say that they're for the people. They're really sticking to the middle class behind the scenes with some pretty crazy new policies that nobody's talking about. I'm going to break it down for you clearly in this video for educational purposes to help people make smart, well-informed decisions based on the facts of what's happening versus, the headlines in which they say that they're here to, help everyone, help the middle class. It was never that way. We all know this. I'm going to break it down for you. Hit the like button. YouTube, share this content, educate more people about what's really going on. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer in all time, you know where to go. Go to greatcreditfast.com if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report. Go to greatcreditfast.com. Do not let it sit there. Don't put yourself in a situation to where you're in this great rug pull and you can't get funding or financing to invest in distressed real estate. Go to greatcreditfast.com. Take a look at this. So 1 hour ago, he warns the world isn't ready for 7% interest rates, right? Jamie Dimon warns Fed funds rate could reach 7%. What's worrying the JP Morgan CEO? They know that this is what's going to happen. But what I think is going to happen is I think a lot of real estate investors in 2020 and 2021 that bought 3 caps and 4 caps, these deals for way, way too much money, thinking rents are going to continue to increase at 15, 20, 30% a year, and that was the new normal. A lot of these investors are going to give the keys back to the bank and they're going to have a panic attack when they realize that they were set up for this. In fact, I think a lot of them are going to feel just like BitBoy Crypto. I saw this video today and I'm like, you know what? This applies to a lot of real estate investors, I believe, in 2024 and 2025.
Crypto! Hey, ask me how I'm doing. Ask me how I'm doing. Go ahead. Ask me how I'm doing. I'm doing better than ever right now while I know that my boss has basically extorted and blackmailed and launched a freaking coup.
A lot of people are going to feel that way when interest rates go from 3% to 8, 9, maybe 10%, and they can't get loans when they refinance. They're going to have to give the keys back. Look at some of these crazy chain of events that are happening right now, and you tell me, what are the odds that this would organically line up like this? What are the odds that this would actually happen, right? So you have only the richest 20% of Americans still have excess savings, right? 20%. I don't see any sign the economy is at risk of a downturn. This is from Janet Yellen. She doesn't see any sign that the economy is at risk of a downturn. Meanwhile, credit card defaults are at all-time highs. Mortgage defaults are starting to pick up. Auto repossessions are skyrocketing. Student loans are going to be due in not even 9 days. This is 26 in 4 days, 4 or 5 days. 5 days student loans are going to be due, right, from 44.5 million borrowers. I mean, the dollar menu at McDonald's is now $2.50. Like going through a drive-thru at McDonald's or Arby's or Wendy's is almost the same price as sitting down at a diner today, right? Before this was the entry-level food, right? Gas prices all-time high. I mean, all of these things that are happening, and they're saying, oh yeah, soft landing. Soft landing is going to happen. Where? In what world is the soft landing going to happen? Right now, homes are 44% more expensive than they were prior to the pandemic. So homes on average increased almost 50%. Yet real wages have fallen 3 years in a row. How does that make any sense? Not factoring in for record high inflation, right? Not factoring in for record high inflation. So you're looking at a situation to where you're going to see this. I'm anxiously wanting to show you what Janet Yellen's showing, but I need to show context first. So right now, U.S. new home sales fall 8.7% in August amid high mortgage rates. Sales of newly built homes in the U.S. fell in August as interest rates and home prices stayed elevated, dampening buyer demand. U.S. new home sales fell 8.7% to an annual rate of 675,000 in August from a revised 739,000 in the prior month. the Commerce Department reported Tuesday. The numbers are seasonally adjusted and refers to how many homes would have been built over the entire year if builders continued at the same pace every month. The jump fell short of expectations on Wall Street. Economists had forecasted new home sales total 695,000. In August, the rate of new home sales was dragged due to a sharp drop in the Midwest. The data from July was revised significantly. New home sales rose and revised 739,000 in July compared to an initial estimate of 4.4% increase, right? So they're saying that it's volatile month over month. Well, look at this. So they say that they're going to get inflation under control, right? They say this. But inflation is indirectly tied to oil and energy prices. And 3 days ago, you just canceled the ANWR drilling lease, right? So what does this mean? Oil prices are going to continue to rise. The last year, what did we use? We used America's oil reserves and greatly depleted our reserves. And they said that they're not going to restock reserves until we get to $67 to $72 per barrel. And after they said this, it hit that number multiple times, yet they did not restock not even a single barrel of oil. And so, as this is happening, they're pushing energy prices and inflation higher. They're blaming then inflation on the economy. And they say the only solution is to increase interest rates. So they're increasing the cost to borrow money, yet making the world much, much more expensive. Meanwhile, stacking more and more debt on the plates of household consumers, right? That's what's happening. So the 1st of September, you have 44.5 million borrowers that are going to start paying massive bills, right? You're going to start seeing default city across America. Look where mortgage rates are today. If you have bad credit, 8.866%. If you have perfect credit, 7.67%. And they're saying that they're going to take Fed's fund rate, we're right now 5.25%, to 7%, possibly. If this happens, you know that perfect credit is still going to be probably around 8.5%, 9%. And bad credit, if you can get a loan, will definitely be well over 10%. Well over 10%. And so what does this look like? If you have, let's say, bad credit right now, on a $500,000 purchase, with $30,000 cash on the table, boom, 30K, that's a lot of money. You're looking at $4,400 a month. Like, who the hell can afford that? Honestly, who can afford that? Even if you're a top earner, you're making 120 grand a year, you're barely affording that if you don't have a single debt. If you have no student loans, no bills, no outstanding debts, you could barely afford that. No car payment. You have 120 grand a year. That buys you the median home if you have 30 grand in the bank. But if rates go to, let's say, 10%, $4,800 a month. $4,800 a month. But now, for context, in 2020, you could have gotten maybe a 3% mortgage. So you're looking at, somewhere between $2,700, $2,800 a month. It's affordable for many people, right? It's affordable, 3% mortgage rate. Now, just looking at this at, let's just call it 8%, go from $2,700 to $4,100. So an extra $1,500 a month, $4,200 essentially, an extra $1,500 a month. Right? That's crazy expensive. Just the difference in interest payments on just the mortgage, not factoring in the additional cost on credit cards and all these other bills that are on adjustable rates that are tied directly to the Fed's fund rate. So when we're looking at this, you say, okay, well, what does this mean with Elizabeth Warren? And look at this. So U.S. senators pressure the Treasury to get more aggressive on climate, right? So how are they going to do this? Well, they're going to tax the poor, of course. That's how they're going to do this. It says Washington, Elizabeth Warren, Bernie Sanders, and 4 other U.S. senators are pressuring the U.S. Treasury Department to step up oversight and offer more guidance, meaning rules, to financial institutions on addressing climate threatening the U.S. financial system. Right? So the financial system is being threatened. They say in a letter sent to the Treasury last week, Democratic senators Warren, Martin, Edward, Sheldon, Jeffrey, right, and Sanders, an independent, welcomed and the department's work on the issue far, but called an added urgency given the increased risk. The Treasury should act now, including through its role ahead of multi-regulatory Financial Stability Oversight Council to address systematic risk, right? This is a crash in property values, coastal property values, South Florida, right, all on the coast. I mean, you're looking at LA, looking at all around Santa Monica, you're looking up and down the coast in California, you're looking at a lot of different areas, right? And they're saying that they need to put in these safeguards, right, for insurance market failures and uninsurable wildfire risk. So this isn't just the coast, this is going to be, all in areas where there could potentially be a threat. And so as climate financial impacts grow, the Climate Hub and Treasury must pursue with added urgency all available measures to address climate and the threat to the stability of our financial system. The Treasury spokesperson did not respond to specific concerns raised by the senators, but underscored the department's commitment to tackling this. Under Secretary Yellen's leadership, the Treasury Department has been at the forefront of addressing the climate, from implementing the clean energy provisions in the Inflation Reduction Act to unlocking billions in public and private financing. Combating climate remains a top priority for the department. Well, I covered this. This was about a year, almost 2 years ago. Yeah, 2 years ago. Actually 2 years, almost to the date, where the CEO of Redfin was saying the same exact thing, saying this is what the future is going to look like. And I was covering this saying, you know what, I think that this guy has better information than the general public, and he's probably getting this information from people that are probably writing the rules. And he's not just making this up, or, you know, it's not just shooting from the hip here. And so what he said, I think that this idea of climate is going to be factored into how people think about housing. It hasn't happened yet. The only people who have figured it out are the actuaries, the people who calculate the cost of insuring these properties. Increasingly, it's going to get harder to get insurance. It's going to get harder to get a loan for these properties because the lenders are going to see the writing on the wall. It's collateral risk. So when you're looking at this situation, increased mortgage rates, increased property taxes, increased insurance, falling real wages, increased inflation, increased energy prices, you tell me that this isn't the biggest rug pull. This isn't the biggest rug pull that we've ever seen. All the while, they sell this big story that, oh, we have this housing shortage, problem. They're building homes at the fastest rate in 50 years. In 50 years. You tell me, what are the odds, right? This is a massive rug pull. Put yourself in a really good position for it. Things are about to get real in 2024. Having cash is really important. Having a situation where you're out of high interest rate consumer debt is really important. And putting yourself in a position to where you can pivot and move with the hard times. If you have bad credit, now is the perfect time to fix your credit, to put yourself in a strong position. The next 6 months, I think, are the perfect time kind of like to put yourself in a really, really good spot. Learn, study real estate, look at all these new changes that are going to be coming down the line. So you can put yourself in a position to make some really smart investments. If you need help fixing your credit, we'd love to help you, give you a free consultation on my company, GreatCreditFast.com. That's GreatCreditFast.com. And catch you guys in the next video.